The auto workers' strike cut Ford sales by 100,000 vehicles and cost the company $1.7 billion in profits. Ford Motor Co. says a 6-week strike by the United Auto Workers Union cut sales by about 100,000 vehicles and cost the company $1.7 billion in lost profit this year. And the strike didn't last very long when you think about it. The United Auto Workers strike, lasting only 6 weeks, significantly impacted Ford Motor Co., and it led to a reduction in vehicle sales by approximately 100,000 units and resulted in a loss of $1.7 billion in profits for the company. The strike also influenced Ford's labor costs, which are expected to increase by $8.8 billion by the end of the contract in 2028, averaging an additional cost of about $900 per vehicle. So, when you go to buy your next new Ford truck, F-150, F-250, Lightning, Raptor, Ranger, whatever it is you end up buying, I think they got a new King Ranch trimmer now. So just know that the prices are going up, and you know why. It also says that Ford had to adjust let's see here. Let me get back on track. Ford had to adjust its financial outlook due to the strike. The company reissued its full year earnings guidance, expecting to earn between $10 billion and $10.5 billion before taxes in 2023, a decrease from the previously projected $11 billion to $12 billion, which, it almost seems like they probably could have saved so much money and retained so much more in a reduction of loss and an increase in profit if they would have come to terms sooner and not let the strike go for 6 weeks, or even not let the strike happen at all. But regardless, here we are today. It says that the strike notably affected the production of high-profit trucks and SUVs, particularly at Ford's largest and most profitable factory in Louisville, Kentucky. The factory shutdown was part of a broader UAW strike that also targeted General Motors and Stellantis, which manufactured Jeep vehicles. And the strike, which began on September 15 and ended on October 25, led to a nearly 3% drop in Ford's share price. So, interestingly enough, one, it says production of high-profit trucks and SUVs. Ford doesn't have any cars, okay? They only have one car left. Two. They only have one car left that they mass produce. Pretty sure it's only one. They only have 2 cars that they actually make, but one of them is limited number, specialty allocation production. So they really only have like one car. Cars are pretty much done, okay? At least for Ford. And I also heard that the Corvette Museum was shutting down also. I think it was tied to the UAW strike. And perhaps Ford couldn't have solved this on their own because the UAW strike was linked and tied to General Motors and Stellantis. So they were throwing their weight around to get what they wanted across the board. We need to keep that in mind in regard to union workforce and union negotiations and higher prices as we go along here. I got something I really want to share with you at the end. Now, Ford, along with General Motors and Stellantis, reached new contracts with the UAW, and these contracts include a 33% pay raise for top assembly plant workers by 2028, elimination of lower wage tiers, raises for temporary workers, and quicker progression to top pay scales. Top scale workers will earn about $42 per hour plus annual profit sharing checks by the end of the contract. So, good news for the workers, bad news for the workers. Ford and GM and Stellantis, they're all working with Siemens and other companies to fully automate and integrate AI into the production, and there will be fewer and far less physical human beings involved, period. Addressing affordability issues, Ford's CFO, John Lawler, announced expected price reductions for internal combustion vehicles next year and discussed strategies to align electric vehicle EV prices with those of gas-powered vehicles by 2026 or 2027 And the company is also adjusting its EV strategy to match manufacturing capacity with demand, including scaling down certain investments and delaying some projects. Now, this one's kind of got me thrown for a loop as to why they're going to extend the price reductions for ICE, internal combustion engine vehicles, next year. Granted, they need to because the prices have gotten astronomical. They've gotten way out of hand. They're too expensive. Interest rates are too high. People can't, and they can't afford them, and they will not buy them for the most part. But I don't know how this aligns with the electric vehicle prices and the future of EV, which is not looking so hot right now. Either way, the real question that I want an answer to is how are they planning on affording this? How are they going to pay for this? Okay. They have lost $1.7 billion so far. They plan on increasing wages till 2028. They're lowering prices on ICE, internal combustion engine. Where's this money coming from? The Detroit Free Press says that Ford adds $8.8 billion to costs with 2023 UAW contract, but reveals a plan to pay for it. And the Ford Motor Co. announced significant cost increases due to the 2023 United Auto Workers UAW contract. The contract will add $8.8 billion in labor costs for Ford in North America, mainly due to higher gross wages, accelerated wage progression, and cost of living adjustments. These changes are expected to increase costs by approximately $900 per vehicle by 2028. And to offset these costs, Ford plans to enhance productivity, reduce expenses, and explore new revenue sources. So, one, I like it because for the folks out there who obviously understand and are facing the challenges of the higher cost of living crisis, inflation, recession, Ford, as a union worker, has got you somewhat covered as they're raising your wages. But this is going to trickle through the economy. So as you get paid more, other things will cost more. So just let's not forget that and gloss over that one. But more importantly, Ford plans to enhance productivity, AI and automation, reduce expenses, less workers, and explore new revenue sources. That's going to be a good one. New revenue sources, which now it kind of got me thinking about how Walmart is exploring new revenue sources, and I have a few ideas, but if you guys have any thoughts or comments or suggestions on where Ford is going to be heading for new revenue sources, drop it down in a comment. I'd love to know what you guys think about that. Now, despite these added costs, Ford did not specify how this would affect consumer prices. However, a Ford spokesman indicated that these costs would not directly translate to higher retail prices. Obviously, we're not going to tell you that. And additionally, the company withdrew its 2023 financial guidance during the UAW strike, but now anticipates full year earnings before interest and taxes, or EBIT, to be between $10 billion and $10.5 billion. This includes the $1.7 billion in strike-related lost profits, mainly due to production interruptions of high-margin trucks and SUVs, resulting in 100,000 fewer vehicles than planned. Ford's net income before the full effects of the work stoppage was $4.9 billion, with an adjusted EBIT of $9.4 billion. The company expects adjusted free cash flow for 2023 to be between $5 billion and $5.5 billion. Ford CEO Jim Farley has emphasized the company's commitment to electric vehicles while also catering to consumers hesitant to move away from gasoline-powered vehicles through hybrid options. I could probably do it with the hybrid, but call me old-fashioned. I want to go to a gas pump or a diesel pump and fill it up and be on my way, go on about my business. I was actually watching a video where a young lady was showing all the new specialty, luxury, elite, prestige Mercedes-Benz charging stations and Tesla supercharging stations and the charging stations for the Tesla semi-trucks and all these different things. And One, I think you need to be somewhat of a mathematician to really figure out how you can actually calculate your charging rate and your battery levels and everything that goes into it. It's unreal. It's unbelievable. It's just really, really a pain in the ass, if you ask me. I'm actually considering maybe testing out an EV for an extended period of time just to give you my honest thoughts and opinions on EV ownership. I've also seen how some manufacturers are looking to create swap batteries that can be swapped out as an option to eliminate the whole hassle of charging and wasting your time by sitting there charging. But I think that's a long way down the road, as well as the hydrogen options from Toyota. We have years ahead of us before that happens. And I almost would rather wait for that because I'm not going to run out and jump out and buy an expensive EV knowing that the prices are probably going to fall and they're going to be virtually worthless the more you drive them and the batteries get depleted. And then by the time the battery is depleted, the cost of replacing the battery would completely negate the cost of owning the vehicle, which makes you want to just throw it in the garbage, take it to a landfill, have it crushed, sold for scrap and parts, and just go get a new one. Doesn't sound very renewable to me. Doesn't sound very green to me, but what do I know? Now, it says that addressing cost control, Ford is focusing on reducing warranty, repair, and recall costs, which have historically been higher than its competitors. Quality improvement measures are being implemented to address this issue. Yeah, if you want to lower your recall costs, have less recalls, okay? A penny saved is a penny earned. Don't lose dollars chasing pennies. Buy right or buy twice. Like, these are basic, simple fundamentals. And honestly, I got to tell you, when Ford has an EcoBoost engine with a catastrophic failure or recall, my mind is just blown. It's like you have your flagship here, your bread and butter, and you keep skimping and cutting corners to save very little at the cost of spending so much. The Ford UAW agreement includes significant wage increases for workers and the elimination of different pay rates or tiers. The contract also improves retirement benefits and reinstates cost of living allowances, COLA. And in comparison, General Motors' new labor costs under similar agreements with the UAW and Unifor are estimated to increase by $9.3 billion through 2028, which translates to about $575 per vehicle. Ford plans to report its fourth quarter and full year 2023 financial results in February of 2024, along with the initial financial expectations for the year of 2024. Additionally, Ford targets meaningful changes in cost and quality. Now, this is brought to you by Reuters, and Ford Motor Co. is actively working on reducing costs in various aspects of its business, including commodities, labor, warranties, and the design of its electric vehicles, EVs, as stated by Chief Financial Officer John Lawler at a Barclays conference. And this focus on cost reduction and quality improvement is a key priority for the next year or two. I don't think this is only going to be isolated to Ford or GM or Stellantis or the automotive world. This is going to be across the board in business. Businesses are going to be looking for ways to cut costs, limit waste, and improve overall customer satisfaction. So be careful, folks. Pay attention. Now, it says that the company is looking to counterbalance the $8.8 billion expense from its new UAW labor deal by cutting costs in other areas. And one strategy involves simplifying future vehicle designs and reducing the time needed for their construction. Automation in Ford's assembly plants is seen as a significant opportunity to decrease production costs. And there you have it. I've been saying this all along, and now Ford is actually coming out and saying it too. Additionally, Ford is concentrating on reducing warranty costs, which have been a huge concern, and Lawler noted that commodity costs for EVs are continuing to decrease, and the company expects the cost of its second-generation EVs, set to be released around mid-decade, to be lower due to higher production volumes, smaller batteries, and optimized designs. So it's kind of like When a new vehicle comes out for the first model year, you don't want it because you know it's going to have all the problems and all the issues that need to be worked out. Let that be somebody else's problem. Let that be somebody else's headache. And essentially what they're saying is the second generation of EVs mid-decade are going to be far better than the first generation. I mean, obviously they have to be. They have to continuously improve. Not only will they improve and get better, the competition will increase, the market will shift and change, and things will become more competitive, ultimately bringing the consumer a more competitive price. Jumping into the EV game mid and tail end of a pandemic and post-pandemic recovery with super low interest rates and supply chain disruptions and constraints was a terrible idea for anybody who jumped on that boat. I hate to say it, but you know it. If you went out and bought a Tesla, you know it's worth 40 to 50% less now today than you bought it. And they're just going to continuously be worth less and less and less, especially with what's going on with Tesla and what Elon Musk is doing. Now, Ford anticipates a significant cost reduction in its third generation EVs by the end of the decade, which Lawler described as a step change in their cost reduction efforts. Yeah, like I said, they're going to keep getting more competitive and lower priced. And then they will still have their higher tiers and their platinums and their limiteds and their one-offs or whatever. In terms of sales, there is strong demand for Ford's commercial vehicle under the Ford Pro line, with orders exceeding the company's current production capacity. Looking ahead, Ford expects a decrease in prices for its combustion engine vehicles next year and foresees a need to reduce the premium price tag on EVs. Lawler predicts that over time, the prices of EVs will align with those of gasoline vehicles. Now, I will say that Ford probably, much like everybody else, inched their price up on their gasoline-powered internal combustion engine vehicles with the pandemic. So when they come down, they're probably going to come back down to where they were, not come down below it. And just a little heads up for my investors out there, Barron says that Tesla stock will go down after the Cybertruck launch, and Ford and GM up. Probably. Now, I don't know if you guys have seen the videos and the posts and all these different things floating around with Tesla's Cybertruck, the limited range, the panel gaps, the requiring of sanding if bird droppings land on the finish. Horrible design, horrible construction. I don't know. This does not seem good. Does not seem great for Tesla. I'm not excited about the direction that Tesla's going. I don't know. But either way, it says that the launch of Tesla's highly anticipated Cybertruck is expected to affect the stock market, particularly for Tesla, Ford, and General Motors. And despite the excitement around the Cybertruck, Tesla stock is predicted to drop following the launch. This decline is not necessarily due to any disappointment in the Cybertruck itself, but rather a reflection of Tesla's recent stock performance and historical patterns following major company events. Prior to the launch, Tesla's stock had risen partially due to anticipation of the event. And historically, Tesla's stock has seen declines after significant company announcements, such as the original Cybertruck unveiling in 2019, the second AI Day in 2022 featuring the Optimus humanoid robot prototype, and an analysis event in March 2023. However, there have been instances where Tesla stock increased post-event, like after the first AI Day in August of 2021. Now, for Ford and General Motors, the situation is different. Their stocks are expected to rise following the Cybertruck launch. This might seem counterintuitive since the Cybertruck could disrupt Ford and GM's truck business. However, there is speculation that the Cybertruck won't significantly impact traditional truck buyer preferences, which could be a positive for Ford and GM. I don't think that folks out there considering buying Ford F-150s and Chevrolet Silverados and GMC Sierras really give a damn about a Cybertruck. I don't think they do. And honestly, I don't think people who will go out and buy Ford Lightnings really give a damn about Cybertrucks either. They'd probably be more inclined to consider a Rivian R1T instead. Now, it says that both Ford and GM have recently faced stock declines due to labor and economic concerns. However, the impact of new labor agreements with the United Auto Workers ratified in November seems manageable and less concerning than it initially feared. For instance, GM's long-term cost increase per vehicle due to the new labor deal is estimated at around $600, but the company plans to offset these costs with productivity and cost enhancements. And this outcome has been better received by investors than expected. Overall, while Tesla stock might see a short-term decline after the Cybertruck launch, Ford and GM stock are poised for a potential rise, reflecting market dynamics and investor sentiment in the auto industry. And I'd be willing to bet there's going to be a lot of folks out there hedging their bets with options calls based on what's coming. So just putting it out there. And what I will do is I'm gonna save this for another video. And it's how the UAW looks to double in size, targeting Tesla, Toyota, and others, and ultimately what happens next. And I got to tell you guys, it's not looking good. It's not encouraging to me. And it says that the United Auto Workers president, Shawn Fain, is making good on a recent promise, and he's coming for the non-union automakers in America. Now, this double-edged sword here, let me know what you guys think about unions and the pros and cons of unions and the overall aspect. And we'll discuss it on a future video. Drop a comment down below. Please smash the like button, do all the good things, subscribe, and I will see you guys real soon. Take care. Bye.